Ladies and gentlemen, Greg McCloskey from ForexLive.com. Today's date is November 30th, actually, 2023. This is a Forex quick look. I'm going to take a look at the dollar versus Canada. While the US dollar moves higher versus most of the other currency pairs against the dollar versus Canada, the dollar is moving lower. Why? Because the Canadian dollar is being bid up. Why is it being bid up? Well, if you take a look at the price of oil prices are higher, and in the process are moving above or have moved above its 200-day moving average. That's this green line in this chart. Why? Because OPEC increased production greater than expectations, and that pushed the price higher here for the fourth consecutive day. The price has moved away from the low on Monday at 74.06. Actually, it's probably the third day in a row to the upside here on Monday days. Monday was a lower day, but the low price on Monday came in at 74.06. The high price today reached up to $79.60. Now we are off the highest levels, which is back down, testing that 200-day moving average at $78.10. We'll see if that level holds support now and keeps the momentum going up to the upside in the crude oil. Now going back to our 4-hour chart of the dollar versus Canada, you can see that the price rise in oil prices sent the price of the dollar Canada to the downside. The Canadian dollar higher tends to react to higher oil prices in the form of higher Canadian dollar. So the price moved below the 100-day moving average of 135.60, but since then we've seen a rotation back to the upside, and we are currently trading above the 100-day moving average at 135.65. So now if we go back in time to earlier this week, you can see that the price also fell below the 100-day moving average here. So sellers had their shot here, they missed, and the price rotated the upside. Now we get the second shot that the sellers are making today, and we'll see if that shot is going to miss as well and push the price back to the upside. What would be worrisome for sellers in this currency pair would be if the price were to move back above the 38.2% retracement at 135.90. We did move back above it here and earlier this week. And in trading here today, though, we haven't gotten back above that 135.90 level since breaking below the 100-day moving average. So watch that level as a risk-defining level. If we move back above that level, all bets are off. I would think that the sellers looking for more downside momentum would give up and force the price back to the upside, stop themselves out. Now, right now, however, the battle is still going on. Can the price get back below the 100-day moving average? If it does, we'd look toward the 200-day moving average down here at 135.17, and below that is the 38.2% retracement. That's of the move up from the July low, going back to this day right here, to the high price that we saw at the end of October, early November. That's where the 38.2% retracement, and that it's where the 50% retracement levels are defined off of those levels. So be aware. So we're watching this level up here, we're watching this level right here, and we're watching these levels down here. Those are the main technical levels for the dollar versus Canada. The battle goes on right around the 100-day moving average. So there you have it, a look at the dollar versus Canada from a technical perspective. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.